Welcome, traders. My name is Adam Harris. I'm a chief market analyst, and I'm just going to take you through what I'm going to be keeping an eye out for this coming week. So we passed non-farm payrolls. We'll have a look at that. An astronomical jobs number, almost record. It is record-breaking in terms of the streak of job growth. The US is breaking all kinds of records under the current administration for employment. Absolutely incredible. And so that looks really good. That was just bonkers surprise. Let's just actually see if I could find it here on the thing. So let's go here and have a look. Bonkers surprise. So the expectation was 187,000 jobs. Previously it was 333 and it bumped in at 353. So not only did it beat the forecast, but it actually beat the previous one as well. So look, the point is that can't go on forever, but it is already just amazing and incredible. So if only we had that in other parts of the world as well. This week, I'm not concerned about the US economy. US economy, at this point in time, there are no red flags. There's a lot of misinformation out there, disinformation, concerns and fears and paranoia, conspiracy theories. There's a lot of stuff out there at the moment in terms of deficit spending and all kinds of different things, which is, yes, those are real problems, but they are actually also being taken care of. If you talk about how, basically the concern here is debt, right? There's this debt that's out of control. The fact is that you have to have a stable administration, and that is actually actively trying to reduce that debt. So although there was some spending required to rebuild the country, spending on building infrastructure and certain things, those are spending that would have had to have happened anyway, even if there was no other debt. So you need to spend that on your infrastructure in any functioning first world country. Any country, not first world or second world, but just you need to do that. So that has to happen anyway. But what I can see under the current administration is they are actually attempting to reduce the deficit. But like a few months ago, also we had a lot of talk about inverted bond yields and all just kinds of crazy stuff. And so there's just so much, it's just prevalent. Like I was watching Bloomberg the other day, and they were they're interviewing all these people because Davos, they had this big sort of conference gathering at Davos, and they were talking to all these people. And literally half the people there, to me, were just spouting complete crap. There were a few people that were just really on the money about certain things. So if you want to get a real sense of what's going on, if you really want to grasp, you don't have to do it all the time, but if you want to grasp it, I really recommend that you go through Ray Dalio's New World Order, which I will find the link for you now so you can see it. I mean, it's not just this one. Any of Ray Dalio's stuff where he talks about how the economic machine works on YouTube, you go and you search economic machine. Ray Dalio's stuff will really teach you about what are the cogs in the system. All right, and that to me was worthwhile education. Really gets you focusing on the right things. There's a lot of stuff out there, and as I've always said in the past, if Warren Buffett wasn't concerned about stuff, I'm not concerned about it. So that's not just, so in other words, I'm not just following Ray Dalio, I'm looking at Warren Buffett. They've been around, doing this for 60, 70, 80 years. If they're not concerned about stuff, then it isn't really a real issue. And so I just kind of, right now, the US is not the issue. So really, I want to focus on the UK. I want to be focusing on these numbers to see how we do there. And of course, other countries as well. So my listeners, I'm very grateful for all of you. You're all around the world. I want to I want to let you know that I do care about the other stuff, but the biggest cog in the machine is the US dollar and the US economy. So we always need to make sure that as long as that is functioning, then at least that reduces the number of things we have to worry about. Let's go to the charts and see what is going on there. Okay, so we'll have a look at the VIX, and I just want to show you, for example, here you can see if you go back to the 2007-2009 global financial crisis, you can see that the VIX started to accelerate from that point onwards. So there were some kind of earlier warning signs of it breaking out here, so this would be sort of late 2007. If you just kind of look at where we are at the moment, we really aren't in any of those places. We're not even near that at the moment, so the economy seems to be, the VIX is relatively stable. Okay, so it's a good, look, there are lots of different indicators out there, but this is a good one. It's a good starting point. And then we have a look at the dollar index, which is obviously a performance of the US dollar against a basket of other major currencies. So remember that there are different asset classes. The US dollar is usually used in about 90% of all the transactions on the planet. And again, maybe that's why people don't really appreciate why it's important to know what's going on. So if you move away from currencies, just currencies, and exclude those, you get commodities, and almost all commodities are priced in US dollars, even oil. So oil, gold, all those are priced in US dollars. So transactions are always occurring in US dollars anyway. On top of that, obviously, it's the world's reserve currency. So what I want to do when I look at the stuff is I also look not just at the performance of the US dollar against basket of other currencies with the dollar index, but also getting a sense of it generally in terms of whether it's strong or weak. So at the moment, we can see recently we actually had a breakout of this consolidation. So it's likely looking at this that we're going to see a stronger dollar at least for this coming week up to this level of resistance. That's a pretty good momentum candle closing above this ridiculous fray over here, this mess. So that, excuse me, looks like a pretty, and it's an engulfing candle as well. Looks very much as though the momentum is to the upside. And also, when you look at it from a monthly perspective, it's within a range. So it actually kind of makes sense for it to head up towards 105. Go have a look at the euro dollar. We can see euro dollar's done a bearish, not engulfing. You can see it's slightly higher there, but also looks like that's potentially going to hit a little bit low. So I would kind of eye this week, just looking for that euro to head down to the next sort of 107 level. Then we can have a look at sterling. Sterling range bound, bearish engulfing candle. Will we get a breakout of this range? Potentially we will. It's not enough of a momentum candle in my mind or to my eye, but it could be something that sees a breakout to the downside. Then we have a look at Aussie dollar against US dollar. That's a very nice bearish engulfing momentum candle to the downside. So I do, and we were looking for a bearish breakout candle here as well. So that would be it. Again, my expectation, usually I would expect it to start a trend, but right now I'm cautious. I'm going to say, look, I just expect it to do a shorter move this week. So it could finish higher, but I do expect it to go down first before it does anything else. Kiwi dollar also, very strong move there. So it's broken through that level of support. My expectation is to see this head down towards 0.6, which means there's a very good chance we'll see dollar yen push to the upside. Okay, so if you look at it here, it is kind of closing in roughly the same area. You've got a couple of different hanging mans there. But from a monthly perspective, it looks really good. So I expect, based off of this, unless something else happens, I'm expecting this to actually continue up, a break up, go through. It's going to start getting into this area where the Bank of Japan are not very happy with regards to that 150 level. They're kind of, so there could be some talk of intervention. We'll have to see, because the yen crosses are all looking very good. Right now, the yen crosses are pretty much the most attractive of the bunch there. Euro Swiss is looking nice, a little bit weak. Bullish engulfing candle here. Look at dollar Swissy. That looks to be heading a little bit higher, but you can see there's resistance here. So it's not a clear-cut thing. There's definitely, in the bigger picture, there's definitely some form of sideways motion or uncertainty in the market. Excuse me, dollar CAD looks good off a level of support, looking nice and bullish. I expect that to head up towards these highs here. So that could be something that it hits. It could, we could see all of these majors do the move within a day. And then we'll have to see what happens after that. But for now, I'm looking for them reasonable, and realistic to expect them to go to the next major levels. Now we're looking at gold. So gold is drifting higher. It's very choppy and messy. I don't really expect it to settle into a very nice trend until it gets past this 2150 level, until it sort of breaks free of this whole entire area, this band of resistance. It certainly looks more bullish than bearish. Broken a previous high over here. It's just not great for trading, but it is trending higher. So I wouldn't put it on my list. There aren't any great setups that I can see that are amazing at this time. Any sort of high probability safe setups, can't see any right now. Let's go and have a look at like crude, natural gas. Natural gas is just on my list because of energy. So there's that level. We can get rid of that. We don't need that anymore. Not really going anywhere, so nothing exciting about that. We can have a look at light crude. So I spoke about there being a breakout, and there was a breakout right into the nearest level of resistance, and then prices come back into this. So we could see it attempt to recover and continue to the upside. We could see that, but also my point here is that there isn't really crude oil itself isn't looking very strong. So a failed breakout, but a breakout nevertheless. If you'd taken this as a one-to-one, you would have hit your target, because that's usually what we do with ascending triangles and descending triangles of pennants and head and shoulders. They're usually one-to-one setup. And in that case, this would have been a relatively decent short-term trading opportunity. So the question now is to see if it's going to fall through this, break through these lows over here, which would then invalidate this setup now, or if it's going to stay above this general upward sloping trend line. We're going to have to see if that's going to be the case this week. It'll be the same for West Texas as well. You can see it's come right down. Let's say if we breach some of these levels over here, these lows here, then we're going to just, you're going to see what it is. If you look from a monthly perspective, it's largely going sideways. So it's good in the sense that, look, the only people that really want oil prices to go higher, obviously, the companies, the big corporates, as well as potentially commodities traders. That's it. Everybody else wants oil prices to drop. There's no reason we would ever really want that to be the case, because it makes everybody's life more expensive. So let's move on to the global indices and see how they're doing. So beautiful, everything looking nice and healthy. We've broken through this area. Let's have a look. Let's just get you fixed up there. All looking really good. We've had a really good consolidation on the weekly, and we've taken up from there. So I was looking for a bit of a deeper correction, but this consolidation is a fantastic alternative to that. We actually had a little bit of a break and a retest over here. Nice bullish candle and a continuation. To quickly sneeze there, sorry, just had to pause the recording. And so this looks pretty good for a continuation purposes. Starting to become a little bit drifting away from the moving averages. We could do at some point, we could do with a bit of a correction there, but for now, I like this. And a consolidation here and a move up means that we could easily see 40,000 before we see a bit of a correction. It's not that far away. So start to accept that as a very real possibility in the coming weeks. Looks good. That's a good thing. We could be genuinely, ladies and gentlemen, we could be entering a golden era potentially for stocks for the next 10, or for the next 5 to 10 years. So it's just something to keep in mind. Remember that it's never obvious in the beginning. It only really becomes obvious 5, 6 years from now when the market has continued to go up, and eventually everybody who said it's going to crash eventually capitulates and says, okay, now's the time to buy, at which point, of course, the market will then have a bear market. So that's kind of how it goes. Again, very nice pullback on the daily here. Bullish candle, continuation to the upside, hitting new highs. I think it's likely to do that. We're just overtaking the highs of 2022 for the S&P. And actually, it's a little bit overextended on the monthly, but you can see here we've traveled parallel to those moving averages for a long time. I don't think any of that's really going to change. So my expectation for now is that this was a really decent pullback. We probably have got a couple of weeks of moves to the upside there. Let's have a look at the NASDAQ. NASDAQ as well, playing out pretty much as per my sketch from last week. Nice little pullback and a takeoff there. Maybe a little bit of a pullback here this week. Any kind of candle, I think, that comes back, taps this could be a nice potential entry into the next move to the upside. All of this looks good, please. But I think for me, the one that's going to be the most interesting to see is the Russell 2000, see if we break out of that. So we're still, we've got an outside candle here, a bit of an indecision candle. But I think it's really interesting. I want to see if we do push out from that. So right now, it's still range bound. The FTSE itself, also a very similar type of setup to the Russell 2000. I'm looking to see if we do. We've produced an inside bullish candle here. We've broken the high, so we just need to get above this 50-period moving average, break above that, then it should pick up and accelerate from there. DAX was beautiful. Consolidation taps resistance, previous highs over here, and then takes off, so that looks good. We've got the S&P, the ASX out of Australia, beg your pardon. Nice bullish setup here. That looks really good. Breaking to, is that all-time highs? There we go. Or at least, certainly, let's have a look. Yep, there we go. Look at that. Very, very nice. The Nikkei. Stalling a little bit here, but I think this is going to be similar. I think we're going to see, I was looking at, could that be a bit of a head and shoulders pattern? No, it just doesn't make sense, other than the fact that we get a slightly small retracement. But actually, I think it's more likely we're just going to see a consolidation and then a continuation. Excuse me, moving on to equities of interest. Apple, even here, holding on this level of support. There we go. Solid bullish candle there. That looks pretty good. So it's just got to get out of above this level of resistance. You can see the weekly candle not looking super bullish. And often when I see a candle like this in isolation, the next candle actually keeps coming down. But look at the daily, I'd be surprised. We're going to have to see. It's this level of resistance. So then we need to see if we can get past that. Let's move on and look at Amazon. Amazon looking good. Really, really nice. Look at that strong recovery back up to all-time highs. So that's going to be its next challenge, is getting past that. And so we'll see if we get a bit of a pullback before it continues onwards. Excuse me. And then we have AT&T looks good. It's breaking above this, so to speak. Look at that really nice behavior here, where it sort of broke above the 50-period moving average, bounced. Then as these moving averages came up, it sort of bounced there and then broke up. Looks good. I think it's got some solid room to go through till 1828, and then almost certainly up to 1930, give or take. A point. ARC, still within this range. So actually very similar behavior here to the DAX and the Russell 2000. Similar. Interesting. ASML looks good. Also gone on and created all-time highs. So that looks really good for you. That looks overextended now. So we are due for daily pullbacks, but still overall they're nice and bullish. So when I say these look good, I mean principally they are not looking weak. They're looking strong. I'm not really talking about individual setups in those. In this, for example, ASML, now it's overextended. It is overextended on the weekly. It's looking good on the monthly. So now I would be looking, now I would be looking for pullbacks on the daily. At some point I'd be looking for a pullback. Even back to 800 could be a particularly good one. Now, Glencore at the bottom of the range. So I was looking to see if we did find support in isolation. That looks good. We should be able to work our way up from here. But that is not a very super strong candle. So I want to see what happens here to see if we bounce up. There's a lot of evidence to show that we have a better than 50% chance of it doing it, but that's not a guarantee. Tisco looking really good. Nice, beautiful weekly pullback. Also looking pretty good here. So there's definitely some resistance there, but I think I would expect it this week to try and push back and go up. Otherwise, the weekly looks very, very good. We've got Amex looking good, all-time highs, looking very good here. Excuse me for a second. So that looks good as well. I mean, I like these are great. Berkshire Hathaway. Remember that Berkshire Hathaway in its own way is a really good example of the economy as well. So that looks good. I always want to then see how Coca-Cola does because Coca-Cola was struggling a bit, but that's also ticking up to the upside of this range. Then we've got BP, which is not looking super strong, but it's exactly the same, guys. We do this every week. Every week we look at crude oil, and then we look at Exxon and BP, and they're pretty much in the same place. So where we had these bullish setups at the bottom of the thing, which usually would indicate that we go to the top of the range, that is what should happen. But if oil does sink, we're going to see the same thing happen there. General Motors pushing back up. It's now at the top level here at $40 there, so that needs to get up. That was really interesting looking to see what happened there. We had that consolidation breakout. And when you look at it now in hindsight, it's a little bit more obvious why. Again, we had that break above the 50-period moving average. We've come back down here. The 20 and the 10 have moved above it. Boom, we've had that nice little breakout from that. So that looks really good. I don't think that's going to be, now it's going to test this $40 level. It's going to have to be tested. We'll see. There we've got JP Morgan. Also looks good. Stalling a little bit where it is now. A bit of bearish divergence, so it looks like it might go through a bit of it, maybe another sideways week. But overall looking good. Adidas. Adidas, I spoke about it going sideways. So I spoke about how we were going up and then we go sideways. But, I mean, now what we have is a bit of a bullish candle here. So we might see it pick up pace and go from there. So nice bullish candle there. Outside sort of indecision / sort of hanging man. It's not really, it's more of just an indecision candle. And we'll need to break above that. So for it to kind of change its future. Meta had a phenomenal week in terms of earnings. That's just absolutely crazy. And if you had asked me over here, if you'd asked me in 2022 if I thought that was the case, I would have said no. But honestly, that was because as a user, I was very dissatisfied with Facebook. And anecdotally, every single person I spoke to was negative about Facebook. And a lot of people left. They just stopped using it a lot. Meanwhile, and that is the case, and Peter Lynch, who wrote One Up on Wall Street, always talks about the fact that if you really like a product and use it and people you know are using it, it should be a relatively safe bet to buy that as a stock. It's not a guarantee, but it's a starting point. And then that's the thing, is that as this sort of started to tank, I didn't think it was going to recover. And what was interesting about it was from a technical perspective, these monthly candles are just super strong. It was just so consistent in the moves that when it's very orderly and very consistent sort of marching soldiers, there's something else going on. If you don't know what it is, there's something else going on. But that is very consistent buying power and very orderly behavior. So somebody thought this was worthwhile getting into. And the problem is, because I'm not using the product and I wasn't following it, I sort of lost track of it. Now, what's happened subsequently is that it sort of stopped going in the wrong direction. It seems to have just sort of stayed where it is, and actually the product isn't annoying anymore. And they seem to have just kept it relatively quiet, and so the product doesn't bother people as much as it used to. And now people are more upset about things like Twitter than they are about anything else, which is fine because those are social media products, and they are social town squares. My point is this. It just is doing incredibly well. It has so many other business aspects to it as well. The Facebook marketplace, I wasn't really aware of how powerful that is. So it was just things that was mainly largely ignorance on my side from the fundamental aspect, but the technicals were looking super, super strong. Then we have Morgan Stanley, which is looking all right. Again, we've pulled back. We've got the bullish inside candle. No, not an inside candle, bullish candle. And I put a question mark here because it should be moving to the upside. So that's what I expect. It looks like it moved up a little bit this week. NVIDIA continuing to shoot up, go high. This looks pretty good. This consolidation was really a great example of where consolidation was a better alternative. It never really did a deeper retracement. I was expecting that back down to these highs. Never did it, but it did do a consolidation and then took off from there. Then we have Netflix. So let me just go back. So if you're watching this and you're thinking, well, I want to get NVIDIA stocks, so where do I do that? For me, if I was looking for it, I'd be looking for it on the weekly, because if we have a monthly overextended and the weekly overextended and the daily's overextended, if I buy now, it's going to come back. I could be waiting a while. So I usually would prefer, I suppose if you're waiting 10 years and you're just thinking, okay, well, I just think I'm going to do this 5 years or 10 years at a time, then that's a different type of setup. Then I might as well just get in now. But usually I would wait for a pullback. So I'll be waiting at least for the weekly, to come back, produce a couple of red candles, similar to this, just a couple of candles pull back, and then come back into the moving averages, and then I'd be looking for buy opportunities. That would, for me, would be the best type of setup. So what I'm going to do here is just sort of mark. I want to mark this. I want to mark where we are right now. And then what I thought I would do is try and map out where we could potentially get a pullback when we do. And when that happens, hopefully I'll recognize it when, and if you're watching this, then I'll be like, okay, this is a good opportunity. Then we have Netflix, which looks good. They had a really good, look at that beautiful consolidation breakout. They look really good. That was the week before last. PayPal, I was looking for that bullish momentum candle, which hasn't arrived yet, but that's what I'm looking for if we're going to get out of this slump. We have Spotify, which continues to do well. That was a beautiful little, very obvious little bullish engulfing buy candle after a pullback. Beautiful. So even if one had taken this, that would be a 2 or 3 to 1 already. Spider, pulling back. I expect this to turn around in this area and continue up. You can see it's battling here. Once it comes back, takes a bit of a breather, it should be able to work its way up, but it is sitting within a range, but that is a double bottom as well. So I do expect this to break out. FedEx, we had that drop and it's sort of stumbling a little bit at the moment. Hasn't really decided what it wants to do, but I don't think it's necessarily in dire straits just yet. I am watching where it is on this 50-period moving average. We'll see. If it drops below this level of support, I'd be a little bit more concerned. But until then, I'm expecting to see a bit of a bullish recovery at some point. Tesla, I haven't really followed since we did have last week's earnings report. We're back down here in this area. I said it was the very last point where I would expect within this downward channel. It's also a point on the downward channel. It could recover from here and break out to the upside, which would make this a bull flag. But if it continues to break through here and through these lows, then that goes away and it's likely becoming problematic. So we just haven't got any more clarification at this time. We need to break lower or bounce up from here to see where things are going to go. And all we've had is price sort of hovering where it is above this level. It could be a pause and go, meaning we get a break and then a pause and then a continuation. So it'll be interesting to me if we then do get followed. We get a follow-up where we get a candle that does this. Just going to move that a bit and we'll see if we get that. We'll see. That would be a pause and go if that's the case. Doesn't have to. Could go up, but I'm just going to mark that. Vanguard continues to look good. Beautiful. Very, very nice. Walt Disney is pushing higher. So that was a really nice call there. And that looks good. Actually, there was a really stronger signal here, but that was a very obvious one in hindsight. So that looks good. And then we have a look at bonds. My expectation here is we had an attempt here to get a bit of a bullish candle. It sort of tried and failed. I'm going to get rid of that for now. And the Euro Bund is a good indicator. I do think this is trying to turn around. So there we go. We are starting to look more and more bullish. For now, I expect this to try and continue to push higher. Let's have a look at cryptos. So Bitcoin's still in this area, but it's had a pullback. So from a weekly perspective, it's retraced. It now looks as though it's going to continue on. So for now, the weekly in isolation, I expect it to continue up. I can see there's a strong level of resistance, and I can see we're stumbling a bit here. But I think for now, I think it's got a better chance of going up than down. Ethereum, pullback, bullish candle. I think I expect that also to continue up. But there's definitely some resistance at these higher areas. We've got Solana, which also looks good. Same thing again. So all of these are looking largely, to me, slightly more bullish than bearish at this time, except with the exception here of Binance, which is just going sideways. But then you can see the 50, 20, and 10 of switching into a bullish formation here. It is within a range, but I think we could see a move here over the coming weeks, pushing out there. You can see it as well here. So to produce slightly higher lows within a bit of a sort of a triangle or a pennant type of shape. We would see it push and break out to the upside. There we go. There's a lot there, bits and pieces for everyone. Overall, the markets look nice and bullish. I want to see some nice retracements on the daily. Currency is not really offering a lot of really nice opportunities just yet. Seems to be most of the action is sitting with the indices and with stocks more so than commodities per se. There we go. So ladies and gents, thank you very much. I'm going to wish you a wonderful week and I will chat to you next week.